If the BOC lowers rates again in March, as expected, we are going to see demand increase. Variable rates are almost guaranteed to be lower than fixed rates, or they're on the trajectory to continue lowering down. Fixed rates have come down, qualification has gone up.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
It's probably safe to say that I'm not the only person at this point right now that has had enough of the Trump saga. But we're not lucky enough that we're going to be able to just sweep it under the rug and not talk about it for the next couple of weeks going forward. Now, this has had a dramatic impact of where interest rates are and where they're going, and it might have just forced the Bank of Canada's hand in a number of different ways as the shockwaves of these tariff situations just keep working their way through the marketplace. So let's talk about why I think that what happened about a month and a half ago, I guess 2 months ago here, from the Trump administration has had a direct correlation to where rates are today, where they're going, and more importantly, the housing market and its interesting little shift that it's had going forward. Hey guys, if you're listening to the podcast, I'm Alex McFadyen. You might know me already as the owner of Flow Mortgage Co. and a guy who's just generally obsessed with sharing information education. And if you're listening to this episode, then you obviously care enough about understanding what's happening in the economic environment, but more specifically, the rate environment. I do not pretend to be an economist. I do not pretend to be anything, but my primary focus is to find the information and share the breakdowns and help you understand how it impacts you in real estate, mortgages, and your money. So if you're listening to this episode, you're probably either in the real estate industry or interested in the real estate industry. And if you could do me a solid of leaving me a thumbs up, or leaving me a great review if you're listening to the podcast on iTunes or Spotify, I would greatly appreciate it. Now, just a heads up, if you're listening to me, I'm a little bit sick today. You can hear it nasally. I'm going to do my best to hide that for y'all and just grin and bear through it. Let's think about what's happened here in the last couple of weeks. I mean, we had, I look back at this, February, the announcement, I guess it would have been January, the announcement of the first round of tariffs, followed by the Bank of Canada cutting interest rates, followed by a week of absolute uncertainty or a few days of uncertainty, and a last minute agreement coming into place to confirm that Canada and Mexico were no longer going to be paying tariffs, and that would be held off until April 2nd. Fast forward until the first couple of days of March 2025, where Trump came back and said, yep, we're actually doing it. Or I guess this would have been the end of February. We're going to start immediately adding these tariffs on Canadian goods straight away. The market itself completely fell off a cliff all over the place. I mean, I don't need to tell you this. If you've been paying attention to the marketplace, whether it be stocks, S&P, the bond yields, you name it, everything just completely fell off a cliff. And it's had a dramatic impact on the psychology of Canadians more than anything else, which is what I'd like to focus on for this episode. Now, when we spoke about the Trump tariffs in the last episode, we spoke specifically about the 25% tariff on Canadian goods. But as you may know already, if you're listening to this episode, Trump actually has already come back and paused until April 2nd, which is probably a reaction to the market pressures and different business warnings. Crazy. Is this guy on? Is this guy off? What's going on? Well, the marketplace has gone a little bit AWOL, and for no surprise, Canadians and in general, the vast majority of people who are involved in the real estate market have basically almost put a pause on what they're planning to do, with the exception of those folks who are coming up for mortgage renewals in the next 6 to 12 months. Now, let's talk about from a rate perspective, what happened following the announcement, because immediately following the announcement itself, the 5-year Canadian bond yields rose. And that was right after, sorry, let me be clear. This was after the announcement that they were pausing the tariffs, not the announcement that they were doing. When they said they were going to do it, it fell off a cliff. And then it jumped right back up, which is indicating a temporary easing in market concerns. Interestingly enough, I think the marketplace has had enough of the on and off and on and off. We're doing it and we're not doing it. Now, the bond yields actually matter because, as you probably know, mortgage rates on the fixed rate side often closely follow bond yields. Now, I'm going to do an episode or a YouTube video pretty soon about why the bond yields are not always going to be the best predictor and why they're actually quote unquote separating themselves from mortgage rates compared to where they used to be. But for now, they're still a pretty good indicator of where fixed rates are going to go. Remember, higher bond yields typically indicate the banks expect slightly improved economic stability, often resulting in lower fixed rates in the short term. But right now, what we're seeing is at this point right now, the rate market has reacted and responded. And we've seen that bond yield market dip down right after the Trump announcement, jump right back up, but still hold relatively steady, which is a part of the reason that even despite all the economic uncertainty, some of the banks have actually announced dropping their interest rates by anywhere between 0.05 to 0.25% across the term. Well, that's not a dramatic amount. And as you know, most of the banks do not drop their advertised rates their promotional rates. They drop their advertised rates. It still is something notable because it's certainly led to, these changes and these dips in the marketplace have certainly led to Canadian lenders across the board dropping interest rates, as I mentioned before. Now, a couple things that are notable about the recent changes, and particularly as it relates to mortgage rates. One thing that we have seen was the 2-year fixed rate, which was for the longest time demonstrably higher than the 3-year, 4-year, 5-year. We've actually seen some of the MFCs, these are mortgage finance companies, some of the non-bank lenders recently come out and announce a significant dip in these interest rates, like as much as 0.5%. So like if you were to look back 3 months ago, you might see a 2-year fixed rate on an uninsured loan in the high fives. And we've started to see those dip all the way down into low fives and high fours, which is very significant. So let's just cut to the chase. What does this mean? Based on the data right now and what we're seeing, the short-term outcome of the events of the Trump administration and all this tariff stuff basically means it's likely that we'll see fixed interest rates to decrease even ever so slightly to this whole Trump temporary tariff relief situation. But long term could be a continuous, like the constant of the tariff uncertainty. Man, that word's killing me. The continuous constant of the tariff uncertainty could increase inflation expectations, which could actually drive mortgage rates higher in the next year. And I had a YouTube commenter recently argue this point with me. I don't think there's much argument to be had. The reality is it would force the bond yields if the uncertainty went up, and we counteracted. And of course, inflation continued to increase in the marketplace itself. So whether or not that comes to fruition, there's a variety of different arcs of where things could actually go. If you think about it from a story arc perspective, there is no doubt in the short term we are seeing the rate market come back down. It's just a question of how long before it works its way back up if these threats continue. So in other news, some other big news that's coming up this week, as you probably already know, is tomorrow's announcement. I guess this will be Wednesday's announcement, depending on when you're listening to this, of the Bank of Canada meeting. Now, this will be their second meeting of 2025. And if you can recall, in the first meeting in January 2025, they cut rates by 0.25%, which interestingly enough, because it coincided with the first Trump big announcement, did not even move the needle in the real estate market. Now, I've got some stats in the real estate market, and I'll jump down there and I'll head back to the BOC stuff because this is pretty interesting. So according to this is the BC Real Estate Association's report from January of 2025, there was a clear rise in activity. And I can tell you from an anecdotal perspective, I saw a significant amount more people reaching out to me in January, especially before even the BOC rate drop or the Trump tariff news compared to February of that year. There was like a 50% drop off of pre-approval inquiries after that news came out, which just shows you how much of an impact that this is having on consumer confidence, as also witnessed by the quote unquote greed index, if you pay attention to that. So January 2025 saw a clear rise in activity. Residential sales increased by 6.4% year over year. However, interestingly enough, there was an overall price decline, which was interesting and not surprising. A lot of that came down to the fact that the condo market had taken a bit of a beating, particularly the amount of condos that were being sold in January 2025, and overall units were higher, but with lower resale values. Now, the average price, obviously, remember, is indicative of overall averages. And I think we're seeing a lot less movement in that luxury market. What I'm seeing in the real estate market is a significant increase in the amount of people upsizing. So upsizing from a condo to a townhouse, upsizing from townhouse to a house. And so it seems like that upsized crowd is the one that's having the most significant impact on the marketplace, followed secondly, actually, interestingly enough, by first time buyers. What was notable about this real estate market is the amount of properties for sale increased massively, almost 30% to over 30,000 houses for sale in January 2024 or 2025, I should say, over 24. This is incredible news from a buyer perspective, yet there's less buyers interested in buying right now because of the economic environment. But what it has done is it created a series of stability, if you will, in the marketplace. Like we're not seeing any significant house price jumps up, jumps down. Anecdotally speaking, I'm still talking to realtors who are telling me that their houses are going into multiple offers, but those are hot properties that are priced well and always going to be desirable properties. So there's definitely still people buying in the marketplace, but just not as many as there were before. If we fast forward here a little bit, if the BOC lowers rates again in March as expected, we are going to see demand increase. First of all, variable rates are almost guaranteed to be lower than fixed rates, or they're on the trajectory to continue lowering down. Fixed rates have come down, qualification has gone up. For all those reasons, we will see a little bit more demand, particularly as we get through the trying to figure out what's happening with this tariff situation. So let's circle back to that BOC conversation here for a second and just run through that. The probabilities right now for the BOC, they were actually only about 40-50% for a while. With the Trump tariff situation coming in, those odds went way up, and then when he paused it went down. And then what happened is we saw the Canadian job report come in way under the maximum, so less people in country getting jobs created. There were only 1,000 new jobs reported out of the expectations of 20,000, and unemployment staying pretty well steady. That actually increased the odds of a BOC rate cut to about 80%. So while it's not an absolute certainty at this point right now, the path has been almost paved for them to cut rates again, which obviously, as you know, is going to make the variable rate mortgage more affordable for Canadians, and it's going to make it more attractive. As a side note, I know this is not a big data point, but I have a lot of people who follow me on Instagram. If you're not following me, check me out at the Mortgage Pug on Instagram. That's a real thing. And I recently published a poll. Are you going fixed or are you going variable if you are renewing or buying today? And over 80% of respondents said variable. So it seems like the overall marketplace is focused pretty heavily on leaning towards variable interest rates. And with this sentiment, it wouldn't be a surprise to see people go more and more in that direction. So this leads into the last question of how you're making strategic decisions in this type of a marketplace. And there's a few things I've talked about before, so let's just break down different options that we could recommend in that this speaker here, myself, could recommend people consider in the current rate environment. Now, keep in mind, these are not exhaustive. And because I don't know your situation, you shouldn't take this as the be all end all. There are situations where I will recommend an alternative to this based on a different reason. Remember, it's not a one size fits all. Okay. That being said, the two options that are considered to be the most safest bet amid the ongoing uncertainty of inflation risk and what's happening right now would be somewhere in that short to midterm fixed rate range or a hybrid mortgage. Now, I would recommend that anyone who's taking a mortgage today, the questions that you would want to determine from your existing broker or bank is, how are you tracking my mortgage to see if there's an opportunity to save money? What's my prepayment penalty if I try to renegotiate midterm? If I'm taking a hybrid mortgage, what exactly is the breakdown of that? Is it 50-50, 40-60? And which lenders can I do that with? And how am I also tracking that? Those are some questions that I would ask. And the second alternative would be that variable rate mortgage. And that's going to continue to look more and more attractive if the BOC has this rate cut here in March as expected. And with the most recent projections that came out just this last week of the BOC cutting rates closer to 0.75 to 1% over the course of the next 12 to 18 months, again, there's a clear winner for someone who's taking a variable rate mortgage. But I would caution anyone to take a variable with the sole intent of locking into a fixed rate. I feel like that's not really a good strategy overall. I can get into that into a separate conversation episode, but something that I would certainly keep in mind. On the real estate side of things, with the increased amount of listings right now, there is more negotiation. Although, one just general piece of feedback is that if you are a buyer out there, remember, it's way easier to negotiate if you come closer to the price that that person is trying to pay versus to try and come way down and get them to come way up from there. What I'm hearing from people is you've got buyers out there throwing offers that are not realistic in any way, shape, or form. And the sellers are just flat out declining, like, why? I'm not going to do that. Even though there is an increased amount of competition on the seller marketplace, the market hasn't fallen off a cliff, and people will still hold their properties, particularly if they bought them in 21 and 22 when the house prices were on the higher side of things. A lot of people now were buying because they wanted to get back in the marketplace. So if you're a buyer in the marketplace, you can get creative on terms, dates, all these different things to put you into a better position. But as it relates to your overall question mark around or thought process around lowballing, doesn't make sense. Now, that doesn't mean come in with a lower offer. Just be strategic about it and do the due diligence in advance. Get your real estate agent to do the due diligence in the area. Have a friendly conversation with the agents. It's insane that this is still such a human business. There are emotions involved, and people still don't get that. Yeah, money talks, but at the end of the day, there's emotion. And if you insult somebody, they're not going to even look at your offer as it relates to what you're doing there. So if you're considering next steps and like moving forward, what are a few things that you can look for, whether you're buying, refinancing, or renewing in this marketplace? Now, really quickly, the renewal conversation is one that I brought up before, and I did a video on my YouTube channel specifically about the framework to making a decision on taking a mortgage term right now. It's called Prepare. Check it out. If you haven't done so already, check out the YouTube channel at Flow Mortgage Co., or you can search up Alex McFadyen and get the information that you need to make the right decision. There are three elements that I look at when it comes to making those decisions. It's the framework, it's the forward analysis that we're looking at, and the strategy of the particular client, which is kind of a part of the framework, like what's happening, where is the data at that particular time. And so when you put those three things together, which I do on a weekly basis, unless there's extreme news like there have been lately, it makes it a lot easier to educate and articulate the lending options that you should choose. So check out the Prepare Framework video. I think it's going to help you out. So what should you be looking at over the next couple of weeks? I would recommend, obviously, looking out for what's happening in the tariff developments from the United States, as they have a direct influence on the bond yield market and what's going on. Now, the thing that I would be cautious of is to basically drive yourself nuts by just absorbing this information all the time. There's so much fluff out there and so much information that's not going to be useful. And so I would be careful to overview or read too much of the information. So if you want to get your information here, I'll be continuing to monitor over the next couple of weeks. We're also going to be monitoring what the Bank of Canada actually says. And if they do cut rates in this upcoming announcement, what is the sound? What is the tone? What does it look like? What is TIF's response to the BOC's announcements? I'll pop a video on the Wednesday afterwards, again on the YouTube channel, explaining and breaking down that information. So if you haven't checked that out, check it out. And then obviously I would look at the housing inventory. Do we still see listings come on? Do we see more buyers get pre-approved? People will say to me all the time, like, how you don't speak for the market. You're right. No, I don't speak for the entire Canadian real estate market. I speak for a segment of the market, but I get a chance to talk to we get over 150 roughly inquiries on a monthly basis. We're not working with 150 new people every single month. Obviously, a lot of people are just asking general questions, but we talk to a lot of people, and our team here, we are well equipped to be able to understand what is someone purchasing, refinancing, what's the urgency, what's the situation, and what's going on. And like I said before, January was just on fire, nonstop. February dipped off, and it kind of worked its way back up, funny enough, again towards the second half of February, right before the whole Trump thing. So it's like you have this like compounding effect of all these people who are just waiting to get back into the marketplace to see what's going on. So pay attention to the housing market. Look at what's going on. If listings remain stable, or if inventory starts to shrink again, and what that would look like from the housing market. Now, as always, if you're liking the podcast episode, before you run away and click off to the next episode, do me two things. Number one, click the link. Leave me a great review. And number two, if you're in the real estate industry, I'm running an event focused specifically for real estate insurance and small business, teaching how to market, how to scale, and how to just generally be a better business and operator. It's going to be in Kelowna on April 3rd, 2025. We're about 50% sold out. We still have some tickets going on sale right now. If you haven't already checked it out, send me a DM on Instagram or look me up at Flow Mortgage Co. at the Mortgage Pug. We have, like I said, some tickets on sale. And if you mention the word podcast or Flow Podcast in a DM to me, I will send you a coupon code to get you a little bit of discount to get you in the door. So again, look forward to seeing you at the event. Hope this episode was fantastic for you, and I'll see you on the next one.
That was an unreal episode of The Flow. I hope you enjoyed it as much as I did on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.